Well, howdy there, folks. Welcome into today's video. We have a lot to get into in regards to this video here today. A lot of things to talk about in regards to the market, stocks in general, so much to get into. I appreciate y'all joining me. I want to jump straight into this. And by the way, I might be on high alert right now. The SWAT team's in my guard-gated community right now. They're looking for a madman in here right now, so I feel like I'm in lockdown. My wife said, make sure the doors are locked. I'm like, what the crap, man? I'm not trying to, I got to record a video here. I'm not trying to worry about somebody breaking in, the SWAT team. Like, this is crazy. So anyways, we'll see what happens as this video goes along here. I might have to grab the 12 gauge. I'm just kidding. Okay. Appreciate you guys joining me. So right off the bat, I thought we'd start the video with some comedy. Stock market last week, stocks this week. And what a turn. I mean, what a turn from where we were at last week at this time versus where we're at now. It's been a pretty quick turn. Now, in regards to this, okay, big turn in the numbers bearish going into the last few trading days here. So this was as of November 1st. Over 50% of market participants are now bearish on the stock market for the next 6 months. That's a big number there. Anytime you go over 50% bearish, it's very rare territory. It doesn't happen that often. And when you hit that, you almost know it's like a perfect contrarian indicator, where essentially usually when you're above 50% bearish, usually you're within a market bottom, and usually the market's going to perform pretty well in the future months, if not future years. That's usually what happens. And so to take you back a few time periods in the past to kind of illustrate this point, okay, this was March 5th, 2009. This was a week before the stock market bottomed. Literally, the stock market bottomed. We hit the most bearish number I've ever seen in the history of the AAII investor sentiment, which goes all the way back to the 1980s. So it's not like this is a new metric. This is something that goes back to the 1980s, okay? And that week, we hit 70% of market participants were bearish for the next 6 months on the stock market. Obviously, we had a tremendous next 6 month rally from basically about that week or the week after, all the way through October, November of 2009. It was an insane bull rally. Like, people couldn't even believe it. And a lot of people were in disbelief at that bull rally, to be honest, because they're, went into it so bearish, and they're like, the economy is still so bad. Look at how high unemployment is. People are pointing out all the negatives. Foreclosures are still happening in mass, short sales. But yet the market went on this beast rally, right? What about what happened last year? Check this out. This is going to blow your mind. Here we are looking at this sentiment, same sentiment survey, but this was last year. Now remember, the indexes in all those tech stocks pretty much bottomed out in October of 2022, right? After they had all been obliterated. Now, if we go back to these numbers during that time period, look at this. Between 50 and 60% of market participants were bearish all at that time. And they were, remember, this is a survey to how bullish or bearish you are for the next 6 months. Are you bullish on the market the next 6 months, bearish, or are you neutral, right? And so here you had all these market participants bearish for the next 6 months. And what happened over that next 6 months? It was a ripper rally. And especially in regards to all the stocks that people thought were going to keep going down. Remember all the predictions? Tesla's going to $50 to $60 a share. Remember all those, right? I mean, gosh, remember all the people that said Meta was still not a buy at $88 and it's going down to $40? I still got the comments on my YouTube channel. Meta's going to $30, $40, $50. Now it's over $300 today. And remember how many people were loading up on put options and short sales in the fourth quarter of last year, thinking we're going to get guaranteed recession the first half of the year. Remember, everybody and their grandma was calling for a bad first half of the year, right? And this sentiment goes to show you exactly how people felt. And so usually, it's a contrarian indicator. So when over 50% of people are bearish on the market, it's usually a pretty good sign that it's actually an opportune time to be buying stocks. Buying and don't stop buying. Now, the market has an interesting phenomenon going on that's very, I would say, bullish for us overall here, okay? So everybody looks at the Dow Jones Industrial Average, S&P 500, and the NASDAQ, right? If you go to CNBC, on their app, what are the three indexes they show you? Dow, S&P, NASDAQ, right? That's what everybody's focused on. That's what everybody talks about and all sorts of things. I can make an argument that those aren't actually the most important stock market index, believe it or not. They are extremely important. They're what everybody pays attention to. The masses all pay attention to Dow, which all of us as stock market investors know the Dow is a joke. The way they weight the Dow is just silly. They weight it based upon stock price. It doesn't make any dang sense, okay? It's probably the silliest index, but that's what the masses are all focused on. You hear everybody talking about, oh, the Dow went, if you watch like, any sort of big news media that's not financial news, and they ever bring up the stock market, oh, the Dow was down 500 points, oh, it was down 1,000 points, up, whatever, okay? The S&P 500 is the most looked at metric usually for general market investors, and the NASDAQ is the most looked at index usually for, let's call it, more sophisticated investors in the market. They're usually looking at the NASDAQ or looking at the Qs in general. But arguably the most important stock market index, if you really want to know what it is, it's actually the Russell 2000. The Russell 2000 is what ultimately, that is the index that can lead, basically can give you signals for what's happening in the future. A lot of times, if the market's about to go through a weak spell, the Russell starts getting hit first before the other major indexes and stocks start to get hit. And all of a sudden, you'll see the Russell dropping, and people will be like, that's kind of weird. The Russell's dropping. All of a sudden, next thing you know, boom, the NASDAQ drops. Boom, the S&P 500 drops. Boom, the Dow drops. And on the flip side, the Russell can lead you out of bad scenarios. And so one of the things you want to look at if you're trying to gauge, like, are we actually going into a bullish market, or is it still bearish, or these sorts of things, one of the things you want to look at is a Russell, how it's doing overall, and you want to see, what is that? What is that noise? I don't know, man. Hearing noises. I'm going to smash somebody in the head with this 7-figure award. They try to come up in here. That's all I'm going to say. Or maybe a 6-figure diamond award straight to the head. Woo, that would not be pretty. It's getting a little scary around here, okay? Alrighty, so Russell 2000, it has had a horrible past 5 years. Down about 14%, up 14% in the past 5 years. That's a horrible 5-year span for the Russell overall. Now, if we go ahead and take a peek at the Russell 2008 through 2000, this is about the end of 2008, through 2018, the Russell did tremendous. And you're in a very healthy stock market overall when the Russell's rolling. When the Russell's not doing anything for 5 years, you're in a very unhealthy market. There's clearly things going wrong in that market, right? A good example of that, if we look at the end of 2006 through the second quarter of 2011, the Russell did about the same that it's doing right now. The Russell was up about, let's call it 11 percentage points or so during that time frame. That's a very unhealthy market. You can get there two ways, right? One could be through a significant crash like we had, obviously, 08, 09. Another way you can get there, folks, is you can go through a market where you're just kind of flattish, right? Moving up, moving down, but you're not really going anywhere. You can happen two ways, right? No different than a stock stagnating over a certain period of time, a 5-year span or something like that. One could be because it crashed huge and then it started to come back. The other could be just it was kind of flatline, and that's what we've been in with the Russell, where it's just been a complete flatline. And you guys know I've been talking about this for, how long am I freaking talking about this, okay? Small caps are insanely undervalued. Insanely undervalued. Right now, this is forward Ps, this is Yardeni research. Forward Ps on S&P 600 small cap are 11.8. 11.8. This backs it up for the past 25 years, basically, in the market. And the only time you could really ever find us trading cheaper than what we've been trading at very recently in the past, we can call it, roughly 2 years, is in the depths of the great financial crisis. That's the only time you can find us trading cheaper on a forward P basis for small caps. So nonetheless, folks, we're in a time period of silliness in regards to small cap land. And the thing everybody's got to understand is you can only stay in these ranges for so long. You can only stay at a super overvalued market or super undervalued market for so long. And eventually, stuff starts to break. And it starts to break to either the upside or the downside. But in regards to an overvalued market, you don't stay there forever. As we saw in the tech bubble, right? Eventually, that ended. As we obviously witnessed in the 2021 market, eventually that ended. These super high valuations, look what happened. They collapsed, right? Super high valuation, super high valuation, super high valuation. It collapsed. And on the flip side, you don't get a long time period usually of down and out. We've been down and out for these valuations for, almost 2 years now. Almost 2 years. That's extraordinarily long. So if you want to talk about, some stocks that are due to go on a beast run eventually here, it's the small caps. And everybody's just kind of waiting. What's going on with the small caps, right? So we have some very bullish momentum happening in the market now at this point in time, now that small caps are starting to outperform, starting to roll to the upside. If we can continue that on, then you can start to feel much better about the state of the market overall. Palantir, now this is a stock that's rolling. Palantir, up over $5,000 here today in regards to Palantir stock. a few things I thought were interesting in regards to Palantir. I saw this out there on Twitter. Well, they call it X now at this point in time, okay? This was a tweet I saw out there. Palantir's Q3 revenue over time, 2020, $289 million. 2021, $392 million. 2022, $478 million. 2023, $558 million. Annual growth rate of 24.52%. That is very, very impressive. The growth that Palantir has had over time, extremely impressive, and I don't think it gets enough credit for that growth rate it's really put up. And although people haven't thought it's been that consistent, I mean, the numbers are pretty darn consistent, pretty darn amazing. That's what I would say about that, right? This was something I saw. Arnie posted this on Twitter today. Palantir commercial client count grew 45% year over year. Extraordinary, right? I mean, insane. The commercial segment from 330 customers this most recent quarter. If we back it up to 2022 in the same quarter, they're at about 228. Okay, so substantial pickup there. And based upon what we're hearing from their new boot camps versus their old pilot program, we're talking about 6 months of time, maybe sales cycle, if not longer than that, to maybe, a customer being able to make great progress in a matter of a couple days and being able to be confident in Palantir in a matter of 2 days versus 6 months before. So if anything, I wouldn't be surprised if we see more acceleration over this next year or two specifically, right? Now, on the reaction channel today, I reacted to the entire question and answer section on the Palantir conference call. So if you want to check that out, it might be worth checking out after this video's over here today, folks. There were so many huge statements made by Alex Karp on that conference call and by the team in general. I think it's definitely worth listening to. Palantir now at this point in time just captured the fourth best spot in terms of the public count. The stocks that have performed the best on a percentage basis, it just captured the fourth spot. We're now up 113% on that stock. Only ones beating that are Meta at 156% gain, Tesla Muscle at 832% gain, and Elephant Shelf that were up 1,220%. Do I think Palantir will take over Meta? I don't know, honestly. I wish I could say, I don't know. It's always a potential. I mean, if Palantir has this growth reaccelerate in a major way, and then we talk about S&P 500 inclusion comes, I wouldn't be surprised if it overtakes Meta and starts to hit like a 200, 300% gain or something like that, because that would just be a whole new level of momentum. Fubo. What the heck? You got to be flipping my flapjacks, folks, okay? What did I tell you? What was my prediction for Fubo stock ending the week? What was my prediction? $3 a share. I said this several times on videos and on my Twitch live streams and all that. I said, and this was way earlier in the week when Fubo wasn't even close to $3 a share. I said it time and time again. My prediction is Fubo ends the week at $3 a share. And it ends at exactly $3 a share. My gosh, that is crazy. That's like I'm pulling a magic trick. I mean, I'm like, what? I mean, not 301, not like 298. Like, come on, man. Really just exactly at 3? Like, that's wild. So today was obviously a good day for the stock. It was up over 9%. The past 5 days were a ripper rally for Fubo overall. 37% up in the past 5 days. Maybe the stock would have ran even more today if it wasn't for the fact that it had already run so much this week, right? A 37% move in 5 days is ridiculous. What a week for Fubo, okay? Now, in regards to their numbers, there were some really bright spots and some not so bright spots in regards to their earnings report here, okay? So their income statement, they had subscriptions were up over 40% revenue, which is phenomenal growth. Advertising growth was up over 30%, which I believe advertising should be growing roughly in line with subscription revenue, if not outpacing it. So I was actually a little disappointed in that. I need to see advertising actually growing faster than subscription, but still 30% plus growth is very, very impressive, right? Subscriber-related expenses, this is something I think is very intriguing and important to look at here. The company has went from, I like to look at subscription revenue versus subscriber-related expenses. We are finally in the positive in regards to that recently, okay? And that takes us from last year at this time, we were obviously in the negative when it came to subscription revenue versus subscriber-related expenses. Not a place you want to be. So what I need to see, what I want to see, what I have to see over the next several quarters is I need to see this gap get bigger and bigger and bigger in regards to what is subscription revenue versus what is subscriber-related expenses. I need to see that gap widen more and more and more, and that will make me feel a next level of comfort in Fubo stock, okay? Now, broadcast and transmission was actually down for the company year over year. They did do some, and if you follow David Gandler on Twitter, he actually posted several weeks ago about a new facility they have and how that could, bring down broadcasting and transmission costs over time. So I do wonder if those, I don't even think that necessarily helped in the quarter, but maybe that's going to help in future quarters. So that's a bright spot there. Sales and marketing, they spent a lot on sales and marketing in this quarter. They actually upped it to over $60 million. Now, based upon what I heard in the conference call, it sounds like they're going to bring down that number substantially in the fourth quarter, this last quarter of the year. So I wouldn't be surprised at all if that sales and marketing number is down quite a bit and if profitability improves dramatically in this quarter we're in. And I think it's smart to bring down marketing expense in this quarter we're in right now. And the reason I think it is an intelligent decision by the company is football season's already been going on for a while. So if people wanted to sign up for Fubo for football season, like college football or NFL, you already did it at this point in time. We're already into November, right? Most people that are doing the signups are at the end of August all the way through basically the end of September. That's your big funnel time. So that's really when you want to be spending out there on marketing. Now, one of the other very impressive things is they grew that subscription revenue 40+%. And that's with YouTube TV was doing all these promotions around around not just YouTube TV marketing money, but they're also doing promotions around Sunday Ticket. Others were doing promotions left and right. And so for Fubo to put up that sort of number in that sort of promotional environment is extremely, extremely impressive, folks. I was, definitely could clap it up in regards to that number there, okay? But yeah, so sales and marketing should come down this next quarter. Technology and development for the company, they kept that roughly in line, down slightly. General administrative actually brought that down a little bit. I thought that was good. Depreciation and amortization is what it is. Total operating expenses for the company obviously are up quite substantially, but in terms of operating loss, they did bring that down by, let's call it a roughly $20 million-ish. So progress, I need to see more progress. Net loss for the company, $83 million net loss versus $152 million net loss in this same quarter last year. So obviously, incredible progress, but we still got a lot more progress to go, right? Long way to go in regards to this one. That's why I gave it a D grade, because I love the progress that's going on there, but we obviously have, the profitability still to fix. Got to get that sales and marketing number down. We got to continue to have the subscription revenue pile up, advertising revenue pile up. That's going to help us out tremendously. And then if we can widen this gap between subscriber-related expenses and subscriptions, then we're really talking. And so overall for next quarter, I think what's going to be the most impressive, I think subscriber gains are going to be impressive. I think, subscription revenue is going to be impressive. I think advertising revenue is going to be impressive. But what I think is going to be the most impressive is the bottom line. I think we're going to see the cleanest net loss number we've ever seen with Fubo, or certainly in probably since they went public. I think we're going to cut down on that number dramatically. And so I think that's going to be the first glimpse of wow, Fubo's making this happen in a substantial way now at this point in time. So we'll see how it all plays out. That's my prediction in regards to that. The most impressive thing for next quarter when they report, which that won't come out till February, will be the bottom line. And I think a lot of people are going to be shocked by how much progress they're going to have made up on that net loss. Okay, that's my personal opinion in regards to that. No, the company did exactly what I said they were going to do. They beat and they raised. They beat on subscriber numbers, they beat on revenue, and they raised on the subscriber numbers, they raised on revenue. Exactly what I said they were going to do, they did it. Okay. Now, also on top of that, the company did reiterate basically they're on pace for their 2025 positive cash flow goal, which is great to hear overall. I think if they come in through with a banger bottom line number, in terms of progress in this upcoming quarter, everybody's going to be convinced that, yeah, they're going to be, in a positive cash flow situation in 2025 overall. So more progress to be done, okay? A lot more progress to be done here. Now, I also think something that is secretly helping out Fubo stock and some of these other stocks is Jerome Powell. If you listen to what Jerome Powell said a couple days ago here, was it yesterday? No, it was 2 days ago. Jerome Powell, he He didn't say he's done, but basically, after you hear Jerome Powell the last few months, he's done. He's done. The Fed's done raising rates. It's pretty darn clear at this point in time. Without him saying, we're done raising rates, because he can't say that. He can't say that. You read through it, he's done. He's absolutely done. There's no question now, in my opinion, and I think in most market participants' opinion. So that takes the boogeyman out of the market of the Fed's going to keep raising rates. They're going to keep raising rates. It's devastating to the small caps. It's devastating to any money-losing companies and things like that, right? So I think that overall is a level of comfort for the market. And now I think the market's hoping for kind of a Goldilocks time period for the next bit of time here, where essentially we can have interest rates just stay the same for maybe 6 months, 12 months or something like that. We don't have the economy falter, and we kind of just have a little Goldilocks time before they have to start bringing down rates eventually. That's kind of what I think is transpiring here. And I think you're seeing that wider than that. You're seeing that in the fintech space, right? Did you notice pretty much all the fintech stocks hit their lows this week and bottomed out and started to come back to life, right? Square, Upstart, Square entering the week wasn't it in the 30s? Well, literally, wasn't Monday, Tuesday, Square in the 30s? I mean, that a huge comeback there. Upstart, huge comeback. Affirm, huge comeback. Rocket, Hood, PayPal, Coin, SoFi. SoFi was, Monday afternoon, what was SoFi? $6-something a share? And now it's $8 plus a share, right? It was a huge comeback for all those fintechs, so I think that's a huge part of this, right? Even look at a stock like Rivian, up 13%. By the way, Rivian does report this coming week. This is the earnings reports coming for this upcoming week. We got a lot. Hims, Freshpet, Rivian, Oobity Booba stock, Dutch Bros. We have Disney reporting, Trade Desk, Wynn, Tapestry, a lot of companies reporting this upcoming week. Another busy week for earnings, just for a lot of the more of the mid caps, small caps. Now at this point in time, we got rid of a lot of the big dogs. Now, I was looking at Estee Lauder, and this is a stock I talked about I might be buying somewhat soon. And I looked over their numbers. I listened to their conference call, and ultimately, folks, I looked at the PE, right? The PE is obviously extraordinary high. The forward PE is pretty darn high as well for Estee Lauder. And their business is literally in decline right now. Just to be clear about that, I don't think it's going to remain in decline forever, but as of right now, literally the business is in decline. The revenues are going down for the company overall. And so I was looking at them versus ELF. ELF I can get at a far cheaper trailing 12-month PE. I can get it at a lower forward PE as well. And the difference is ELF growth is skyrocketing. They just report a 70+% revenue growth, and they nearly 3x their bottom line year over year. Versus an Estee Lauder, that business is going down, and their net income was down 90% year over year. 90%. I mean, at the end of the day, I'm just kind of looking out there. I'm like, do I really want Estee Lauder, or would I rather just buy more ELF? And so eventually, I'll probably make a move on Estee Lauder. I'm just not in any sort of a rush. I think still the best game in town in the cosmetics industry is ELF on a shelf. I know it's gone up a lot over the years, but all that matters is growth, future growth, P metrics, forward P metrics. That's what matters in the end, and your relevancy as a business. And clearly, Estee Lauder, if anything, they got less relevant over the last couple of years, and ELF's relevancy has skyrocketed over the last couple of years, right? Big difference there. Now, some other good things for the market. Look at GSG. This is a commodity index in general. If you don't have this on your watch list, I would highly suggest you add it to your watch list. GSG will let you know how commodities are doing, which is going to ultimately let you know how inflation's doing or not doing, okay? So GSG is down about 5.7% now in the past year. It continues to chill out. That is phenomenal news. Phenomenal news. Obviously, it was an incredible bull run in commodities that started around May 2020 and ran through about May 2022. It was a ridiculous bull cycle in commodities like we've never seen, and that led to, obviously, some huge inflation that we had to deal with. Also, WTI continues to be in a tougher place as a past year for WTI, down 12.25%. It's also chilling out recently, even with everything that's going on in the Middle East. So that's very good news as well, because all that boils into inflation, right? It all boils into inflation. Now, this is Truflation's latest numbers. Truflation has it at basically a CPI of about 2.35%. And I think it's just a matter of time before the government numbers start to reflect what Truflation's reflecting here, folks. I think it's a matter of time. And when I look at what's going on in commodities in general, I am very convinced. When I look at what's going on in commodities, and when I look at what's going on in housing, I'm very convinced that we're headed to the twos here for CPI. It's just It's just a matter of time. It's just like, what month do you want to predict it on, right? Now, this was kind of important, okay? So unemployment numbers came out here today. Unemployment rate is now at 3.9%, right? Which is up from about 3.4% in January. Now you might say, oh, that's horrible news for the market. Unemployment rate going up, right? What the freak was that? I don't know. I think I just heard a rocket launcher. I don't know what's going on out there. But anyways, in regards to unemployment rate, right? From 3.4% we started this year, now we're up to 3.9%. Market would usually look at that as a very negative signal and be like, oh boy, we got a recession coming? Like, what's going on here? Why is the unemployment rate going up? This is ultimately what the market wants to see. The truth is, this is what the market wants to see. The economy was viewed as too hot over the past year or so. And so when the economy is viewed as too hot, it keeps inflation high, and to kill down inflation, you have to kill down demand, right? And so the market loves the fact that unemployment's gone up. Now, it's a slippery slope, because if all of a sudden you talk about 3.9%, then you talk about 4.9%, 5.9%, 6.9%, you could run it up really fast, and next thing you know, you're in a full-blown recession, then you got to try to dig out that hole, right? So we've got to really keep an eye on this over this next 6 to 12 months, folks. But remember what the Fed used to say. Before Elizabeth Warren started, attacking the Fed, right? And Jerome Powell had to start, talking differently, right? Because if you remember, the Fed in 2022 was very truthful with us. They were saying, there's a pretty good chance of a recession. Unemployment's going to go to 4.5%. Then Elizabeth Warren and others started saying, oh, so you're going to make people lose jobs. And then they even brought race into it. And somehow, Jerome Powell's like, crap, I don't want to be seen as a racist. We better just stop talking about this. They brought all types of stuff into it, right? And so this led Jerome Powell and the Fed to walk back all of their unemployment's going to 4.5%. We could face a recession. There's tough times ahead. Because then he started getting scared of all these political attacks and all this political pressure from these folks and making him look like he's a villain, right? When he's like, dude, I'm trying to bring down this inflation that I partially caused, and it was many other factors other than just the Fed, I can tell you that much. He was just one factor of that high inflation. But that's a situation that was, they talked about 4.5%. So don't be surprised if at some point in 2024 we hit a 4.5% unemployment number, right? Because that was that's what the Fed said was going to happen. That's literally what they said was going to happen. But they can't talk about it like that now. Because once again, it's not politically correct. And to say Americans are going to lose jobs based upon your actions, people don't like that. And so they walked all that back. But I don't forget. I remember 4.5%. I remember that, okay? Now, let me just talk to everybody here for just a moment. I think something very important, okay? In the market, you're going to have lots of ups and downs, right? In all arounds, as I like to call it. And just like all of a sudden, everybody's doomsday a few days ago, and now all of a sudden it's like brighter skies ahead, the emotions of the market are up and down and all around, right? And so for us as investors, as individual stock pickers, we can watch it all, but just treat it like it's entertainment. That's the way I like to do it. I treat it all as entertainment. Oh, all these predictions, this is going to be the end of the world. Oh, this is great, this is bad, this is blah, 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 blah. Okay, I pay attention to it all. I keep an eye on it. But ultimately, what am I doing behind the scenes? Adding my portfolios, building my portfolios for 15 years straight. You know how much crap I've seen in the past 15 years? You know how many worries, how many scares I've seen in the past 15 years being in the market? There's so many things that have happened and transpired that were major worries at that time that I forgot about them. And you know how many more things is going to be over the next 15 years? Like the things we were dealing with in 2022, a lot of that stuff went away. We got a whole new batch of stuff in 2023. A lot of that stuff will go away in 2024. Then we'll have a whole new batch of stuff and a whole new set of worries. When you're in the market, it's always going to be a lot of crap to worry about. Always. It will always be that way. And you as an individual stock picker, an investor, somebody building your portfolios, you can watch it all as entertainment, but at the end of the day, just stay focused on building your portfolios up, week after week, month after month, year after year, until you built a great portfolio overall. And over a course of 5, 10, 15 years, you're going to be able to look back and be like, damn, I'm glad I did it. I'm glad I didn't get caught up into all the short-term crap that was going on like other people did. And I stayed building my portfolio regardless of recessions, inflation, deflation, great economies, good economies, okay economies, worries, geopolitical worries, all this stuff, okay? It is what it is. It's going to be there. There's going to be new batches of stuff that creep up. new things for you to worry about, new stuff to get you scared out of the market. And the name of the game is to take advantage of the opportunities that are given in this market. And there's a lot of damn opportunities given in this market right now and will continue to be there for the next several months. And it's up for us as investors to take advantage of that overall, okay? I can tell you, running the private group, what do we all focus on? Like, what are the people that have 6 figures in the market, 7 figures in the market? People like myself that have lots of money in the market. What are we all focused on? The main focus always is building up our portfolios, adding to great companies, owning 10, 20 stocks that are high quality companies, right? That are going to produce us amazing returns over the coming years. That's what we all focus on, right? That's the name of the game, folks. So if you want to join us in there, be part of that, like-minded people that are focused on this stuff, building our wealth, learn everything I got up here, get access to all my courses and things like that, apply with the pinned comment down there, folks, and take your game up to the next level. Because I can tell you, all this other stuff is just sideshow stuff in the meantime. It's stuff for entertainment. But at the end of the day, all that matters in the end is building your portfolio up, adding to great companies. There's a lot of crap companies in the market. There's going to be a lot of stocks that underperform the market significantly over this next few years. There's going to be a lot of stocks that outperform tremendously. There's going to be the ELF type opportunities in this market. There's going to be the Meta type opportunities in this market. There's going to be the Palantir type opportunities in this market, right? Like, there's going to be those sorts of opportunities. And so it's up for us as investors to find those opportunities, build out positions in great companies that are going to scale out. And despite all the crap that goes on, companies prosper, they do better and better, and it is what it is. Appreciate everybody joining me as always. Much love. Make sure you apply to join my private group. We'll get you in there hopefully next week, and there'll be a pinned comment down there. Have a great day.